Morning, morning, morning. How's everybody today? Welcome to the very last session in the January series. Been 4 weeks, a lot of fun, and we have got quite a few things to have a look at this morning. I haven't had a chance to go through everything, but as Chris is doing analysis with you, I'll continue putting my little list together. As always, please pop your pairs in so we can get straight to it and start having a look at the market, setting some alerts maybe, looking for those trading opportunities, and we'll see how this morning goes. We'll be back into the VIP forum. We are expecting a lot of snow to be dumped on us from 2 o'clock, so I might be sneaking out at the middle of the day to go get Connor from school before that happens, otherwise we won't be able to get him home. And of course I'm going to be continuing working with that new little tool that I'm creating at the moment. Before I hand you over to Chris, I just want to thank those of you who have written reviews for us based on this training on our free index site. It really does help Serene Education, and it also helps other students that are looking to do this. As you know, this has been a test for us, first time that we have done this in terms of being online with you guys on not one-on-one sessions, but live sessions throughout the month. They are going to continue. It is going to be a course. Markets.com have continued to sponsor new clients. Your reviews that you're putting up there are fantastic to help us and to help those that are considering it. So a special thank you and shout out to Henry, Alison, Enza, Andy Lake, John and Helen who have done that for us. And when we start our new sessions into the month of February, you guys will receive your February sessions free of charge. So thank you for doing that for us. So I'm going to hand you over to Chris now. I'm going to start having a look at pairs that you've put up, which none of you have as yet. So I'll just kick it off with the US dollar yen.
Good morning, everybody. Hope you can hear me clearly. Right. Okay, so US dollar Japanese yen. Let's have a look at that. Apply the Forex Easy template. Come on, there we go. Let's just move all that out of the way. Okay, matrix. First thing, straight away, look at this little bug over here on the right-hand side. How's it looking? Predominantly blue. Okay, monthly, however, still up. So, okay, so if you look at the chart over here, you can see we had a very bearish engulfing December, which engulfed the November, the October, the September, the August months prior to that, and all that taking place at a level where we've had consolidation predominantly over the whole of 2017, and yeah, effectively the resistance level as we head into the latter part of 2018. So we clearly have a ceiling level to the upside, and if you look at this as a whole, we know this has pretty much been trading within a range. Effectively, it was more condensed range to 2017. Then we had the breakout into the 200, then the pull back into this range yet again through 2018. So effectively, we've seen price this month already testing the lows over here down at the 200 pair moving average, which has been and was a previous target level last year. So huge December candle with very little wick gave us that continuation and a knee-jerk reactional move of equal drive. I call it an equal drive candle. So statement candle of intent, an equal drive candle of intent on the outcome of the December candle. Having said that, you can see that predominantly most of January we've been taking or seeing the dollar move high. It's been sitting around this area just below the December close for the last week or so. However, after yesterday's Fed announcement, interest rates remaining the same, more of a dovish picture from Powell saying, listen, yeah, they're going to be focusing more on their books, and they're going to be taking their time in terms of raising interest rates. We saw that as a good sign because remember, if you raise interest rates, that means borrowing and lending becomes more expensive. So if the Fed, if the big guru at the bank says, sorry, we're not going to be raising rates, anybody out there as a business owner or will be looking at it as a positive because he'll be able to then get borrowing and lending at the current level instead of it rising. The Dow, the S&P, the Russell 2000, all of the indices in the States jumped high yesterday on that outcome because that's fantastic because that means that they're less likely to see any further increases in interest rates, which means that they can borrow and lend at a lower rate if they were expecting more rate increases. So the dollar took a knee a hit because of that, because ideally raising interest rates then increases the value of the dollar. Therefore, people start to buy the dollar. But if they're not going to raising rates, then you're finding less people going to jump in initially, and that's what we've seen. So we've seen this kind of a retracement now from the resistance level highs. And I mentioned to you, if we are to look for opportunities on the particular pair, i.e. a continuation of this, I mentioned this almost a week ago, we need to see the December low point remaining in play as that seeding level. Okay, if you look at the indicators as well, when I say the indicators, the two moving averages, we have the 20 and 50. So we have short-term and intermediate traders still shorting this particular pair because price is below it. The 200, however, is still supporting us. So the long-term bias on this one is still pretty much flat. You can see the 200 has been flat for the last 2 years. It's starting to show a bit of weakness here on the 2018. It's starting to dip low, but ultimately, yeah, it's just your shorter-term and intermediate traders are currently shorting this. The RMO is still above the midline. So we have the red arrow. Okay, so we clearly see, just by looking at the December candle, there's been a lot of bear sentiment. We saw back again last year in January, another bear candle, and the outcome in February. Now, we've seen December being bear, and the outcome in January being negative. But we've seen a pullback this time, unlike what we saw in February of last year. The candlestick is blue still. Yeah, candlesticks, even though on the retracements, have remained blue through this period. The last time we had a red candle was way back in 2016. Okay, and this is after a huge fall. But there again, remember the RMO in particular and the candlesticks formation themselves are trying to number crunch quite a lot of data in the background. So bigger pictures, you're going to see a lot more lagginess. But there again, this is where the importance of understanding candlesticks, the creation of candlesticks, will then give you a far better and far quicker idea of where that sentiment lies, because it's relevant now. Candlesticks are dictated on buyers and sellers currently in the market. If they currently are in the market or currently not in the market, that's the beauty of them. Okay, you don't need an indicator to tell you that. You can just see that in the candlestick formation itself. So we have a lot of mixed signals. We have a red arrow, blue candle, RMO blue, and the awesome is above and dark. So there's more positive sentiment on the monthly, but we can clearly see that we've had a very negative December. We've seen a very negative sell-off initially through the month of January. Now we've had a big pullback. So now I'm saying, well, as long as the December low remains in place as our seeding level, then we should be looking for price then to revert to the downside. There again, we need to see macro data painting a continued negative dollar picture, and therefore people then would rather hold the yen in that case. Okay, so you've got people coming from a risk appetite, okay, to choosing a risk averse set, i.e. the yen is safety. As I mentioned to you this last couple of weeks, the yen is looked at as a safety mechanism. Carry trades in particular is one real good point that they tend to use the yen for. Read up about it if you guys are more interested in it. The weekly chart now. So going to the weekly, we should get a box saying yes, sell, yeah, because everything over here is negative. We have the red arrow, red candles now, perfect. Okay, the RMO is below. It's literally treading water, but then again, price is treading water. Price hasn't really made a new low over the last couple of weeks. It's pretty much been going sideways. But as I mentioned to you, the importance here is if we are just seeing this as an aggressive pullback in terms of profit taking after the massive sell-off we saw in December. Initially, if we are to see further negative sentiment coming out for the dollar as we head further into the year, in terms of a slowdown, which everybody seems to think we're likely to see, then we need to see the current level remaining as resistance. Okay, we have the monthly pivot above price, which tells me that great, price is here. There's a monthly. We're trading lower than last month. Perfect. The weekly pivot is here, so we're trading lower than the last week's close, which is good. Therefore, we should be looking for continued selling. We're now seeing the selling this week on what happened last night. So now, ideally, looking for February, it will be more conducive to see price trading lower than the monthly S1 to then really tap into the levels below price towards that December low. So to the next level, monthly S2 level would be 136. Below the one that you're looking down towards the low of the candle for December is another 142. Then the monthly S3 is down here. So you can clearly see there, due to what happened on the December candle, the pivots for the monthly are quite open, which is good for opportunities. We have everything in alignment here. The only thing we don't have is obviously momentum, because MACD is dark. Okay, here we need to see that move down. If we go down to our daily, wait for that to come up, you can see the daily, the MACD is not in alignment, so therefore we can see that price is obviously moving sideways. And there's the MACD, okay, the OSMA we like to call it, which is a hybrid. You see it's above the midline and dark. It has lost momentum, guys. This bullish momentum. That's good, because we are looking for that continued selling sentiment to drive low. One could see the weekly S2 to the weekly S3 level, which is 50 pips, which is today. I just need to refresh that candle. There we go. Perfect. So we can see a rollover. Okay, this is the cleaner air between your monthly S1 to the monthly S2. Less hindrance. Okay, less. If we get out of this consolidation below that level, we start to see more extensions to the downside. We have non-farm payroll tomorrow. Okay, very, very important. Non-farm payroll tomorrow. There's a lot of data coming out tomorrow. They're expecting a contraction in the employment stats. For today, this afternoon, for the US dollar, we have things such as the unemployment claims figure. We're looking at the Chicago PM data. What else do we have? We have natural gas storage. Other than that, CAD-wise, we have we got GDP month-on-month stats for the CAD. This is going to be important. Sorry, not for this particular pair, but that's one you got looking at today in particular, which is going to be important. Down to the 4-hour. Well, we should get another box. There we go. Let me just refresh this chart quickly, guys. There we go.
Okay, the reason why I popped this one up as a first pair whilst I'm waiting for you guys to put yours in is the fact that on the 4-hourly, we've got a red arrow, red candle, RMO's red, OSMA's red and bright. We're getting that momentum continuation from that big drop that we saw last night and yesterday evening session. And we can see prices trading towards their support level at the moment, so the weekly S2. So as an intraday trader, we could be looking for potential intraday trades between the weekly S2 and the weekly S3. We can see that the weekly S3 and monthly S1 are pretty much the same level, so therefore we're trading into a very strong support. But there is still a trading opportunity there for us today. If we can get that 4-hourly close lower, if you're a 4-hourly trader, then we'll be looking to target just short of that weekly S3. If we drop down onto the hourly time frame, our entry is still going to remain the same. We're going to be looking for that box breakout and that close below the weekly S2. Here we've got a red arrow. Can't see the color of that candle at the moment. RMO has just gone red and OSMA is red and bright, again showing continued momentum to the downside. So we are getting those continuations. If we can get that breakout outside of that range and below the weekly S2 to target the just short of that weekly S3. Is certainly something that caught my attention this morning. I popped it up into our Serene Trade Alerts group. Obviously, nobody's a member of that as yet. But as we said last night, we're just getting used to the format of it all. But that is the first thing that I popped up as a tweet this morning. One of the best pairs that I've found so far at the stage. So we'll move on to the next pair that's up. It's from Allison, and that is the Australian dollar, US dollar. And Allison's looking at this on an hourly chart for a buy position.
Hi, good morning, morning, Ali. Okay, so yeah, as we mentioned with this one, here you can clearly see that we are trading at a very long-term support and resistance level. And you can notice that here on the hard right edge, i.e. through the last 3 or 4 months of 2018, we started to see that slowdown. A lot of volatility has crept into this particular pair. We've seen price moving high, then low, then high, then low. A lot of apprehensions crept into this. And now if you factor in what happened yesterday, because remember this is a dollar cross, Australian dollar is a commodity cross itself. It's also got its issues because it's obviously feeding a bigger market in the vicinity, which is the Chinese market. Then you have the dollar who's looking at their stats yesterday. The weakness in terms of Powell's stance, in terms of projection, in terms of interest rates hikes, which has led to further movement to the upside on this particular pair. Now, very strong support mechanism. Remember, as I mentioned to you, if we continue to see price trying to drive lower than a major support and resistance level and not being able to close on that level, you're going to find that each attempt's going to get weaker and weaker and weaker. And the OSMA tends to show you that. So each time price is driven to the current low, she's carrying less weakness or less selling bias if she's trying to drive low, which essentially means that we start to see like the RSI, for example, on the Forex Made Easy template showing you convergence, and vice versa if she's trying to drive into a major high and she's losing momentum, like over here, for example, at the end of last year, the end of 2017 going into 2018, you'll see price trying to drive into the same level as before, but the OSMA in particular starts to show you signs of divergence. Then it enforces you to say, well, there's less likely to be any further selling sentiment behind this. We're likely to see more of a retracement. In this case, you'll notice that the 20 and the 50 period moving average are the ones that have actually remaining above price, so that would essentially be our next target. Or, Ali, what you could do is look at the December high as a viable first target, which is essentially where we've come from. We've been there before, and you can see if you just pull it back even further, you'll see that there's a consideration point through May, June, and July of this year, which even goes back to the April, June, July level. And if I drop down to the weekly, you'll probably find there's a pivot line that's actually pretty much indicating that level. So I'm just going to draw one purely just to get an idea or a biased idea of where the 20 period moving average is. If we look at the setup on this particular pair, you have red, 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 but weak. Okay, so it's still carrying sell. You can see the matrix is predominantly telling me that. Then I drop down to the weekly, you start to see a different picture. We're starting to see more bullish overtones in terms of the MACD is positive now. So if you look at what happens through this consolidation now over the last 3 or 4 months, you'll see the MACD's been spending more time above the midline than below it. So we're starting to see signs of a foundation being built. As I mentioned to you, strong foundations, higher building. Okay, similar here. If we cannot see continued selling, and we had an attempt low again, quite an aggressive one in December, which failed, and we gave this hammer, then you're likely to start to see people saying, hang on a moment, why the hell am I still selling this? If people are still selling this, let me start to move out of my positions, i.e. raise stops, etc., or just literally take profit at the current level. And you start to see more contracts, those selling contracts now go back out on the open market. People go, hang on a moment, price has not been able to get below this level for months at a time at a 2015 low point too. Let's look for signs for buying. So then they will start to look at either strong Australian dollar data or weaker dollar data, which in yesterday's case is clearly that. The Fed unlikely to change rates anytime soon. Looking more now to see how the growth is globally as well as internally. Powell's got to try and juggle both parts. Strong growth in the US economy, but very weak growth internationally, globally, is not good for the dollar. Okay, that wouldn't be good for any currency out there who's growing exponentially. So here, clearly, we're starting to see that sentiment. Notice the 20 pair moving average on this particular pair. There's only been a couple of times where price has actually been able to get above that level. But overall, the 20 has done a fantastic job of resisting here on this time frame. Here again, you can see this week. Okay, there's only 2 days left of this week, 16 hours. We are clearly trading above it. There again, we're trading above it through the months of November. Okay, once we got above it, the candlesticks had still shown signs of negativity because they were still red. Same here. Last arrow, blue. Candlesticks, red. RMO, red. OSMA, blue. So we have 2 blues, 2 reds. So yeah, we're still going through this area where we're trying to forge out a very strong support mechanism. So we're clearly now trading into an area where it's the resistance level high of this consideration that we've had since September. So we get above that and remain above it, and if the candlesticks can change as we head into the month of February, then the likelihood is we could see a stronger increase for the Australian dollar against the US dollar, for that matter, because their momentum is clearly showing that building process taking place on those lower time frames. So here again, the picture's not all that great on the monthly and weekly, but there again we can see that it's still carrying a bit more negative sentiment. However, we can clearly see that there is some sort of support mechanism being forged currently. If we drop down to the daily, this is where we need to see signs of more of a statement, i.e. blue candles in particular, because if we've spent the best part of the whole month moving high, you should have seen by now more bullish overtones, i.e. blue arrow, blue candle, RMO above, OSMA above. But here again, you can see blue arrow, the candlestick is still red. Okay, the RMO is still below the midline. Yes, it's lost momentum, i.e., selling momentum, but it's still below the midline. The OSIMA is clearly moving to the upside. Notice way back here in 2000 in November of 2018, you can see we were carrying bullish momentum even though we're trading under the 200. Here, we're trading above the 200, nice bullish engulfing counterclose, but we're still carrying that. The algorithm still thinks that there's still a negative underside. So essentially, we should be looking for upside, but just be aware that there's clearly more risk attached because we're not really certain. Hence the reason why it's far better to wait to see how this month, especially tomorrow's data comes out, how that's reflective. And then if it stays above the 200, then we start to look for those opportunities to the upside. So aggressive measures have to be taken at this early stage because we're still very much in this consolidation we saw on the weekly time frame. You know, that box, that rectangle I drew. Um, if you can get out of all that noise, and I'll just pan out so you can show you that, get out of all this noise, you'll see that the 200 period moving average has been capping price since April of last year. Now, if we get above it, that means now we don't have to worry about this downtrend. The downtrend now becomes null and void. The start of an intermediate new uptrend becomes possible. But if we get out of this consideration, this messy consideration, as price has just been forging out this low, then we get out of here, it starts to show you more of a bullish overtone. Okay, I hope it makes sense. Because you can see that as long as price has been trading below the 200, the RMO, the rudder of the ship, is being predominantly below the midpoint. Okay, here again, we need to get that above. Okay, we need to see more signs of that taking place. So, just going to move back in again. Apologies for the lines, guys. I just want you guys to see all that. I'm just going to give a clean chart again. Here we go. So I'm going to drop down to the 4 hour. Nikki's going to take over. Yeah, you understand the daily? Sorry, guys. Back to the daily.
Okay, so Alison, as I said, I did have this on my list as well. I think that our entries would be different. Even as an intraday trader, this pair, it's looking good. Okay, yesterday's close above the 200-day moving average was a big sign for us, and we are getting continuations to the upside here on the daily. However, that monthly R1 has acted as quite a strong support and resistance over quite a couple of the time frames, and therefore what I'm looking for is a daily close above that. As I said, my charts are slightly different to Chris's. I don't have weekly central pivots, weekly pivots on my daily charts. I use them more for the intraday from 4 hourly down. So there's quite a clear sky after that monthly R1 on the daily. So I'm looking for at least that daily close higher today. But then we've got to take into account that today is the last day of the month, and that monthly R1 pivot is going to change tomorrow. And then tomorrow we've got non-farm payroll. So this is a US dollar cross pair. So it is on my list, but it's on my list for next week. I've still got my support line at that monthly R1, and I'm still wanting to see price trading higher than that next week because it's not only the monthly R1, it is a long-term price support and resistance level. So as long as price is trading higher than that, tomorrow we're going to see different monthly pivots in play, and then we've got to see the back end of non-farm payroll. So I'd have this on a list, put it on a piece of paper, and be looking at it over the weekend. After you've had the weekly and monthly closes, we will have our new weekly and monthly pivots, and then we'll be looking for continuations to the upside on this pair next week. But I certainly wouldn't be looking to trade this intraday at the moment because if you even drop down onto the 4 hourly charts, you're going to see that you've got a lot of resistance lines above price intraday as well. So there's a lot to be said of this pair intraday. If you go back to the daily and stick in a support resistance there at the daily swing high, you'll see that that's just adding more fuel to the fire as you drop down onto the smaller time frame. So I wouldn't be looking to intraday trade this until next week. We want to see nice big continuations on the daily, nice weekly closes, nice monthly closes, and then we'll have more probability on our side for nicer trades during the course of next week. Right, the next pair that we've got is the New Zealand dollar, Canadian dollar from Andy, and looking at a buy off a daily time frame.
Morning, Andy. Okay, let's hide those lines. Don't need those lines. So we can see on this particular pair that, yeah, we've had a huge extension over the years, and then we had ceiling level, and then we had a breakout, the pullback, and then the continuation. But the continuation is kind of become null and void as we headed into the sort of sell off into the 2015 lows, which is a major support and resistance in its own right. Excuse me, and then a huge move to the upside. Now, remember here, you're trading two commodity crosses. Okay, one of them is reliant on importing oil and gas, and the other one is reliant on exporting oil and gas. One of them is reliant on the price of oil and gas, and the other one is reliant, yeah, ensuring that obviously you can get a better deal. So at some stage, excuse me, you're going to see you have to look at here in terms of oil prices, especially for the Canadian market, because obviously oil prices, which OPEC dictates, will obviously have an impact on how the loonie does, and vice versa. Is in agricultural, they need a lot of oil and diesel, etc., and all those type of things to run machinery and all the other bits and pieces. So they're again vitally important. Uh, so here on the hard right edge, you'll see that there's been a huge increase up here for the New Zealand dollar, very strong candle to the upside. However, if we're looking for continuations, okay, because that's what we're looking for. This is a massive candle in its own right, Andy. Nice strong bull candle and a punching higher after successive, what, 1, 2, 3, 4, 5 months prior to that of selling, pretty much doing away with all of that. One would have expected to see a more stronger reversal, i.e. punch high, at least going up towards the highs in April before we saw the attempt at the 2015, sorry, the 2016, 2017 high point. But December gave us absolutely nothing. So you're thinking, well, why this huge move up for everyone just to dump it? Okay, so there's a concern there in its own right. And as I mentioned to you, if you look at the current candle, but the previous candle to the current candle is indecisive, you have to say to yourself, we need to see a decision. Okay, this month, because it happens to be on a monthly time frame, we need to see a strong decision. It's either not going to continue to move high, which then takes on more of an overtone where you start to see the signs or the starts of a signs of a evening star formation, which in its own right is a negative signal, where an evening star is bull candle followed by indecision followed by bear candle. Okay, no, not going higher. That would then give us more of a negative overtone. All the other scenarios break high. We've broken above the 20 and sorry, the 50 and the 20. Now it's pulling back naturally, and then we get the continuation. Now, for it to be a strong sign of a continuation, it needs to remain above the moving averages, ideally, to reflect that bias, i.e., remain above the close, or sorry, the low of the December candle, which is currently right now, and then we get that knee-jerk reaction to the upside. If that's clearly the case, we should see 100% of this being pretty much printed out here, which will take us back up towards the highs we saw in 2015 and 2017 alike. However, if that's to be the case, price needs to be trading higher than the close of the December candle. Currently, that's not taking the case. We're still almost 100 pips lower than the close. No, there again, look at the matrix, predominantly blue. Okay, if it's blue, good. Then it needs to be trading above the monthly pivot. No, the monthly pivot is above price. Okay, cool. It needs to be trading above the weekly pivot. Yes, it is. Is it trading above the daily pivot? Yes, it is. So the shorter term and the intermediate, we're trading high. The long term, we're still trading low, which is a concern. Okay, which therefore reflects the uncertainty that we're seeing in the December candle. The question mark I ask myself is, why is everybody in the market in November and nobody turned up to the party on that strong move for December? That's a concern because you're seeing a huge move of close to 500 or 600 pips. Where the hell did everybody go in December? That's the concern. If you take the wick highs from the high here in 2016, the 2017 and 2018, draw a line on there, you'll see that the December high is pretty much in play with that. So we clearly still have a seeding level in play. Okay, we had a swing low in 2017, swing low in 2018. We're not trading higher than that swing low in 2018. So effectively, we are still in this intermediate downtrend. We have actually priced this trading within the channel. Not a great one, messy one, but if you took the lows over here, yeah, it's pretty much the same distance between equal drive. So we're at the high point of the channel. Something, as I mentioned, Eddie, we need to see more of a statement from the market. Essentially, if you're driving high, continue the highs. Come on, give me that movement. If you're not going to drive high, then ultimately what we're looking for is, because of the indecision, if we get a decisive bearish candle here, that means this is clearly a ceiling level top, and essentially we should be looking back down in the next couple of months as price then falls low. Like I did over here, bull candle, indecision, decision is bearish, the outcome is bearish for the foreseeable future. Same scenario here. Okay, so keep an eye on that. I would essentially, as I mentioned to you, if I'm looking for highs because of the matrix telling me, or not the matrix telling me to buy, I need to be trading higher than the monthly candle. Okay, if I drop down to the weekly now, you'll see that the RMO, which is the rudder, is still below. Okay, here again, if we've seen a very bull candle move higher, the candlestick should reflect that bullish undertone, which should be, the candlestick should be blue. It's still red. Okay? If you look at the two pivot points, this is where I love the pivot points. If the matrix is telling me to be bullish, then I need to be making new highs, because the December candle, the November candle was very, very strong. The December candle was rubbish. But that means if I'm looking for bullish sentiment, I need to be trading, I need to see price above the monthly pivot. So here's price. Where's my monthly pivot? Well, it's still above price. Well, that's not good, because that means I'm still trading lower than the previous month. That's not good. And the previous month was an indecisive candle. Remember that, okay? There again, if in an uptrend, price needs to be trading above the weekly pivot. Yes, that is. Perfect. Now I look at my moving averages, okay? My shorter term 20 and my intermediate 50 are below price. Perfect. Another check. Where's my 200? It is at price. We have not moved higher over the last 3 weeks at this particular point. That is a concern, because remember, the December candle was indecisive. Okay, if we cannot move high and get a reflection that there is still bullish undertones where people would still prefer to hold the New Zealand dollar against the CAD, then you start running into the rules where, hang on, clearly people do not want to hold the New Zealand dollar against the CAD. You'll start to see that negative sentiment falling out. If that's the case, we need to see price remaining below the monthly, which it is, but it needs to get below the weekly to enforce that it's now trading lower than the previous week, to really enforce that, yes, we're not wanting to move high. So clearly what it's telling me right now is we're trading in no man's land, the Bermuda rectangle. Because remember, your pivots are going to help you indicate if we are continuing to make new highs or continue to make new lows, because that would happen. If you want to see a new swing high, price needs to be making new highs compared to the previous month, the previous week, the previous day. If price is still trading below 1 and above 1 and is not in conjunction, then we are in a consolidation. We're none the wiser. So here again is risk attached to this, because we don't have enough. Notice the last couple of weeks, saw selling, then last week we saw a lot of buying. So there's a lot of to and fro for this particular pair, which doesn't really give us a lot of, how can I say it? It doesn't lend its hand into giving us a more fluid move, higher or lower. There's a lot of indecision, because each week they're changing their mind in terms of what they want to do, which is not a great reflection. Is everybody's pretty much moving with each other, so that's a concern. So here again, trading into the 200 pair moving average, that is a concern, because if we are looking for highs, that momentum to come through, because you can see the 200 pair moving average is below price. Price needs to be trading above the monthly 200 on the weekly. That has clearly not been the case. We're going into our 4th week now, where we've clearly seen price not being able to get above it. We have blue arrow, but the candlesticks are still red. The RMO is still below, and the awesome is blue but dark. So we have two blues, two reds, canceling each other out. There again, nothing's really working with each other. Not a good sign. Down to the daily, we get a clearer picture. Therefore, we get a loose a box saying yes, this is to buy. But if you look at it, do those candlesticks show a lot of genuine underlying sentiment? No. There's a lot of wick. So people over here are speculating like crazy. There's a lot of people in here just speculating on small announcements, trying to move high, pull back, trying to move high, pulling back, trying to move low, pulling back. And look where the 50 pair moving averages. So that yellow line over here was the 200 on the weekly. Now on the daily, you have the 50. So you have two moving averages at the same level, plus the monthly S1 level at the same level. There's a lot of resistance factors on here, Andy. So here again, if we are generally looking for continued upside, she has to close above this current level. If she doesn't, then there's no likelihood of further highs. It's more likely to be to the downside. Because remember, the further in time you go, you're not making a valid return on time invested. People go, why the hell am I in this particular pair? They'll start to drop it. They'll dump it. We have a viable target level, which will be back down towards these monthly S1 levels, because you can see she's been range bound for the whole of January. So if she doesn't make new highs, then we should be looking to the downside. Okay, so very messy one at that. You can see a lot of consolidation through December, a lot of consolidation through January. Yeah, she's got into this shell. There's not enough substance out there to really get it moving. And remember, there's a slowdown in the economy. CAD will be feeling that because if people aren't moving stuff logistically, they're not using oil and gas for the production of rubbers and plastic, etc., like that. CAD's going to take a knock. There again, New Zealand also slowdown in the Chinese market. Nobody's going to be buying from them, and they're a agricultural product. So dairy prices or dairy products will be hit. There's a knock-on effect. Okay, and if it's going to be on both parts who rely heavily on the larger market as a whole, the global market, yeah, you're going to see it's going to kind of be a knock-on push and pull effect on this particular pair. We can clearly see that taking place on this pair. I don't know if Nick wants to add anything more to that.
Yeah, well, I think that we had this pair as a watch list pair from the beginning of the week, more towards the intraday side of it, and we were pointing out the risk factor involved in trading it intraday because we were counter trend trading against the monthly central pivot. Now, we've seen for this past week, we have not been able to see price break our entry once in terms of an intraday setup, and therefore the fact that we're on Thursday, Friday is tomorrow, end of week, end of month, I certainly wouldn't be looking at trading this intraday. If you're looking at trading this as a daily time frame, we're still needing a close above the weekly 200-day moving average for the rest of, and so that's going to be on Friday. We're still looking for a close above monthly resistance as well, and we would still, in hindsight, looking at where that monthly central pivot is, be taking a counter trend trade. So what we're going to do, again, put this down on your list, Andy, and see what it's like on Sunday, Monday, because again, those central pivots are going to change. Things we might be trading above that central pivot moving into the new month, and then we can certainly be looking for continuations above where that weekly R1 is. We can see that that is a long-term support and resistance level anyway. But at this stage, I wouldn't be looking to trade it. As I said, we've got that weekly 200-day moving average, the 50-day moving average here on the daily, and we're coming towards the end of the week. So I wouldn't be looking at trading this counter trend intraday, let alone on the daily either. Okay, the next one we're going to look at is from Henry, and it is the Euro New Zealand dollar. I think Chris and I were looking at that this morning, and he's looking at a sell.
Morning, Henry. Morning. Okay. Let's bring it up. Data. Thank you very much. Right. Okay. Matrix, pretty much negative. That RMO on the monthly and weekly is still, the rudder of the ship is still pointing in the upside direction. Yes, it's a lot weaker than it was, say, midpoint through 2018 on the monthly in this particular instance. If we look at negativity, then ideally we want to see signs of that. So, what color is the arrow? Currently is at the moment now, excuse me, red. However, the RMO is still above the midpoint, and the OSMA is red as well. So we've got two blues. I didn't mention the candlestick. Candlestick is blue. The RMO is blue. Arrow is red. OSMA is red. So we got a sign where they're not all working in alignment. Ideally, we want to see red across the board. Essentially on the larger time frames to indicate that we are effectively in a negative trend. You look over here, we have come from a high point. Okay, the highs in 2000 and where you take the body highs or the wick highs. Yeah, we did see ceiling at the 200 moving average. But you'll notice that she's still stuck within this consolidation that's been in part for the best part of a year and a half now. Here again, stuck at the 20. She's trading currently below the 20 just. But notice, we had a lot of volatility. November, sell-off. December, buying. Currently, sell-off. So there's a lot of uncertainty coming into this particular pair, where before we used to just get movement, higher or lower. Now we're starting to see a lot of apprehension coming into this particular pair. Okay, so that's a concern because it tells you that the mechanics, the underlying mechanics between buyers and sellers is they are undecisive on this particular pair. Here again, you're trading a euro. Okay, it's got its own issues. Brexit, a lot of signs that we're seeing a genuine slowdown with some of the larger nations in the European Union. We've just had stats come out this morning for German retail sales month on month. Now, the retail sales figures aren't all that important, but it clearly tells you the mindset of people out there. If that economy is doing really well, you tend to see retail figures doing well week in, week out because people are spending their cash. That means they have extra cash. They don't mind spending money on the high street. The previous figure was 1.4%. Okay, so expansion above zero. They're expecting a negative 0.5, so clearly a drop, quite an aggressive drop at that. Below, that's contracting. The figure came out this morning at negative 4.3, so 4 times as bad than expected, which is not great. Okay, and if you look at the actual graph on Forex Factory, you'll notice that over the years we've been seeing more of the retail figures being below the zero level, which is contracting, than above it. So clear signs that we are seeing a slowdown in the largest economy in the European Union is showing you that. So yeah, things are not looking rosy in the euro. Um, that goes for France, slowdown. You got Italy issues, Greece, yeah, getting a bit better, Spain getting a bit better, Portugal getting a little better. Then you got Brexit, big issue. Yeah, so if your largest economy in the European Union is not doing well, and you got the likelihood of UK leaving, which is the second, which is the largest purchase of goods and services from the European Union, yes, it doesn't look good. Investors will be looking at that as a bigger picture. So these signs are starting to stack up. Okay, so they would probably favour, if you look at the euro, a weaker interest rate compared to the New Zealand dollar, where the New Zealand dollar, I think the interest rate, if I'm not mistaken, you just want to get a quick gauge of that. The interest rate in the New Zealand dollar, where is my data now? Come on. Sorry guys, I thought I had it on my page. It is quite strong. Oh goodness gracious me, where did we go? It's well above 1%. Okay, so carry trade type stuff starts to become a more reliable source of income, where the data in the euro is not looking all that good. So to try to kind of barge yourself in terms of looking for opportunities, what people do is take the euro, purchase the yen. So the yen is still weaker than the euro at this stage, heaven forbid. Then take, because you're making slightly more capital because you're exchanging a slightly stronger currency against a weaker currency, you're getting a bit more bang for buck. Then taking that capital and pushing it into New Zealand dollar. Okay, then you're holding a currency, the New Zealand dollar, which is got a stronger interest rate, which is then going to make you a far better return on time of holding that particular pair over time. So yeah, carry trades or something like that is what a lot of people tend to do. So seeing weakness in a major economy, they'll take the currency, move it to a weaker currency, take the exchange, convert it, take that and pump into a strong economy like an emerging market, and sit on it until things get better in that other economy, initial economy. Then they move the currency back in again. Yeah, that's just how they work it around. But you're seeing selling sentiment moving into it now. So my concern looking ahead is prices trading within the December range and the November range. So I'm going to start to see those signs when I drop down to the weekly now. So drop down, there we go. So not a strong movement through the upside, November to December. Now we're seeing a total change. Here again, everything's telling me to sell, but here we have red arrow, blue candles, RMO blue, Osmo blue. So yeah, two cancels, two reds, two blues. However, having said that, you'll notice the importance of those pivot lines, monthly and weekly pivots I like to use. You'll see, I ask myself the question on the weekly and down. Where's price? It's trading below the monthly. Okay, cool. So that means that we're trading lower than last month, which is great. And we're trading lower than the weekly pivot, which means that we're making new lows week in, week out. My two moving averages, the shorter term and the intermediate term traders are selling this. However, the long-term bias price is still looking long. Okay, which pretty much if we sell down to this level will bring us back towards the low in November, which is the 200 moving average effectively as we stand. So as long as we're still trading above the 200, essentially there's still that bullish overtone because the momentum trend line, long-term trend is still to the upside. Okay, there we go. Next level be the monthly S1. Down to the daily, you should get a sign. He was looking good over here. We have red candle, RMO below, and the awesome is below and getting stronger. So there is signs. Yesterday's bearish engulfing candle has engulfed all of that indecision over here. There. Okay, we've seen. Remember, we have a downtrend pretty much taking place now where we have a swing low, and yesterday swing low. Okay, cancelling out that. Perfect. We look at the moving averages. the 20 and 50 above price as well as the 200. So everything looking good on the daily and lower. Okay. Notice, however, that our two pivot lines, we had the monthly S1 below, now we have the weekly S1 below, and they're quite close together. So those two bands represent that both on the monthly time frame as well as on the weekly time frame. In the past, there has been consideration at this particular point. Hence the reason why the pivot lines, both on the monthly and weekly, are drawn at the same level. We have to be vigilant because, yeah, not too long ago, a couple of weeks ago, a couple of days ago, we saw price trading into this level and then retracing aggressively. So this is the one thing we need to be aware of. Is this pair has been moving, then spending a bit of time going sideways, then she does a move, then she spends a lot of time moving sideways, then she drops a bit, then she moves a lot to the side, and we're seeing exactly that playing out in this particular pair. Very tentative trading on this particular one. Probably another reason why you can see that capital has been moved offshore into another one and just churning away, making a substantial amount, especially when you can trade in large denominations like a lot of institutions and funds can. But yeah, clearly you can see they're playing out over here on the hard right edge. Yeah, I would be wary of where she's currently trading at purely because of the long-term support and resistance level. Get below all this, then yeah, we continue to see more negativity. Get below that, then yeah, have we made yeah, then we start to see more of a greater fall. The monthly candles, the monthly pivots are pretty much showing you those levels. We start to get more cleaner. Because if you look at it right now, we're trading in an area where through 2018 there was a lot of consolidation. Okay, so yeah, we're not really out of this uncertainty, but we're that much closer to trading. And we continue to see weakness in the euro in terms of the stats and the data and stuff like that. I think a lot of people would far prefer to be trading New Zealand dollar with a stronger interest rate. So yeah, in terms of carry trades and stuff like that, it'd be far more applicable. So keep an eye on it, definitely. Yeah, I'll definitely keep an eye on it. I don't know if Nick's going to add any more to that.
Sorry, I was just working on something else at
That's
the moment. But having a look at the Euro New Zealand dollar, yes, it's certainly on my list. If we're having a look, if we could drop down onto the hourly time frame, sorry, you on the daily. So, yeah, if you drop down onto the hourly, here we can see we're starting to get that box breakout. We've got a red arrow, red candle, RMO is red, SMA is red, and now turning bright. So the strategy in itself is starting to set up. We're needing that hourly breakout and we're needing that close in order for SMA to remain red and bright. However, if we get that, we're still trading below our three central pivots, below our three moving averages, and we've certainly got a potential entry to target on here. You're looking at pretty much of a 1-to-1 risk-reward ratio. You need to stick your stop loss above that 20-day moving average and above that box. But it is certainly something that I have my eye on today. I've stuck it up as my little tweet to follow that. I've set an alert for a breakout on this particular currency pair and be looking at a potential intraday trade on that this morning. So that's a good one. Well done.
Yeah, I mean,
well done, Henry.
Just want to push in, at 10 o'clock we have the GDP quarter-on-quarter figures for the European market as a whole. We also have German unemployment change coming out at 5 to 9. They're expecting a negative figure there. So if it comes out worse than expected, yeah, people look at that as a sign as negative because Germany is the strongest economy in the European Union. If Germany's not doing too well, that means people aren't buying its products, which is a major concern because people tend to buy. And remember, Germany is probably the only country, bar a number of the Eastern European bloc countries, which runs a surplus. Okay, which means it doesn't have a deficit. So to have a country which is meant to be strong because it runs a surplus and they're going through negativity or showing signs of negative, that's not a good sign overall. Okay, so just keep an eye because we could see the knee-jerk reaction, as Nikki mentioned, down towards this level. Even if you come away with 20 pips of that, job well done. Okay, we could see a knee-jerk reaction on the data that's coming out later this morning within the next hour or so. So keep an eye on it, Henry.
Okie dokie, right. We've got one more student pair to have a look at, and then I've got maybe one or two that are on my list that nobody has mentioned as yet. Just conscious of the time, it's 8:20 already. We'll move on to Neil, who's looking at the Euro Chief on a buy position intraday. Euro Chief. No sound.
Oh, hello, can you hear me now?
Yeah.
Ah, did you hear any of that? Clearly not. Only you heard it through Nikki's mic. Okay, sorry guys, apologies. This pair, Neil, has been going sideways for the best part of 6 months. Okay, and as I mentioned to you, if you stand back and look at the bigger picture, if you start to see signs where prices hasn't been able to make new lows or consecutive new highs over time, you are stuck in a consolidation. And consolidations do not bode well for people who are looking to trade trends. Okay, a consolidation enforces the idea that we do not have anybody or that herd mentality. Okay, as I mentioned to you, wildebeest out there on the plain, they're all sitting down munching. Then they can smell signs that okay, the grass is really dead over here. I can smell water in the air. Let's all move. And you see those pictures on the National Geographic where you have these hundreds of thousands of wildebeest all moving in one direction, and that's what I'm looking for. At the moment now, they're all scattered all over the plane doing their own thing. They couldn't give two hoots what anybody else thinks. And that's a concern because we don't have that direction, and we need to see that direction. You can see at the moment now, you will notice that price too. In a strong trend, your moving averages will show you that, will indicate strength in that trend. Where's price? Well, she's trading around with the 20 years. Where's the 50? Well, that's below price. Where's my 200? Well, that's way above price. But the clear fact that we've been trading between the 20 and the 50 for a prolonged period of time tells you that we're stuck in a slow moving sideways range. Okay. In a strong trend, the 20 would always be supporting, resisting it. Then the 50 would be supporting, resisting. Then the 200. Here we've got things all over the place. Not a good sign. Okay, so yes, we have a red arrow, red candle. RMO is red, the OSM is red. Perfect. But the matrix is pretty much telling me it's screaming blue. But there again, we've seen Euro bulls this month, moving from a low point to a high point again. So yeah, we're getting a lot of mixed signals on this particular pair, which is a concern. Because if you're looking to trade a trend, a nice strong trend, we don't have it. Okay, we're looking from a high to low. We're looking for negativity on this particular pair. So therefore, something to drive low, to remain below the current 6-month low, to then look towards the 50-pair moving average as our initial target, which is in excess of 160 odd pips from where the current support mechanism is. So there again, we need to be seeing signs of, if that's clearly the case, negativity. We can't see blue because now it's going a counter trend. Okay, and if we are looking for a counter trend, it needs to be making a new high. So ideally, in this case, trading higher than the box. Last of it, just choose the. There we go. Otherwise, we're still making a swing low, swing low, swing low. See, we haven't made a new swing high. We need to see a representation of that. So we've got 2 days, 15 hours, 33 minutes of that. And if she does it, she's going to be trading back into the 50. And in a strong uptrend in this case, the 20 to the 50 should be below price. So yeah, the signs are we're still in the air for this particular one. And there's an important one on this one over here. 1200 is the guide stick for this particular pair because that's what the Swiss franc bankers wanted it to be. So 1200 is the all-time resistance level high on this particular pair. So if we do get out of this consolidation, okay, and we don't see any further lows because you can see the 200 pair moving average has been below price since August of 2017. If we get above that, then there's going to be far more of an aggressive move high, back up towards the 1200 mark. And the 1200 mark has played a significant part in this because prior to 2011, way over here, we had Euro looking very negative against the Swiss franc. And then the Swiss bank jumped in and said, hang on, because the Swiss economy is very, very small, it does a lot of exports. It imports a lot of European goods. It cannot have a stronger currency than its trading partner. So it tried to devalue its currency, i.e. sold billions in Swiss franc and bought billions in euro to change that attitude, saying, no, the euro needs to be above 120 for us, for the Swiss government to be happy with that. But you can see, through this times of turmoil where the European Union was going through a lot of dire stuff, people said, no, we don't want to hold the euro because the euro is weak. And then essentially in 2014, this is when Draghi said, listen, yeah, we need to implement a quantitative easing program, i.e. inject morphine because things in Europe were so bad that the Swiss government said, sorry, we can't keep up with the 3 trillion euro print mechanism. Let's just dump it because it is crap. So why hold it? And that's where they dumped it. And this is what's happened now. A lot of people lost a lot of capital over there because a lot of brokers went bang. And this is the uncertainty with Swiss. If you trade any Swiss currencies, they like to manipulate. They like to change things. And this is the concern at the moment now. So another reason why, if you're trading Euro Chief, be a bit more attentive. Down to the weekly. Yeah, very messy. See, you're trading back within this range. That's what I mentioned, because we are in a 6-month consolidation. So it's very, very messy range there in itself. If it can get out of the range as we head further into this year, then perfect. Currently on this chart, we can start to see more of our bullish overtone. Blue arrow, blue candle, RMO, blue, Osmo strong. All the moving averages below price, perfect, but straight into the weekly. See, now we're running into the weekly, yesterday's candle, trading into the weekly R3. If we are looking for opportunities, got to see price trading comfortably above the weekly R3 level. Okay, there's 40 odd pips in that. So in terms of a box breakout today, would probably be an opportunity. There again, we need to see more of a stronger bullish overtone for Euro data coming out today. At the moment, we have mixed signals, which is a concern in itself, which could stop this rally essentially. So yeah, first requirements, get above the current high for the last 20 hours or so. Blue arrow, blue candle, RMO above, Osmo above, but you can see the weakness, especially over the last 12 hours, there's been weakness. Now we're trading below the weekly R3, but above the monthly R2. So that's a good sign in terms of both my weekly pivot and monthly pivot are still way below price, which is a good sign. My moving averages all nicely in order, 20, 50 and institution, which is great. I'll be looking to see a box breakout and then an opportunity up towards the monthly R3. There again, we need to see more of a stronger picture coming out of the Euro GDP stats. Okay, we need to see strength there to really give us that momentum indicator. Don't know if Nikki wants to add any more to the hourly and stuff.
No, I don't want to add anything more to the hourly. I'd like to add something back to the daily, please.
Daily. Okay, let's go back to the daily. There you go. You can take us out.
Right, so if you can take that yellow line off here, great. So this is what caught my eye this morning, was the fact that we had yesterday's daily close above the 200-day moving average. I think we discussed this last night. That's what we were looking for. The current daily candle is trading higher than that, and the strategy in itself is set up. So straight away it caught my attention for a potential trading position up to the next resistance levels. I do have a resistance level slightly lower than Chris, just below the monthly R3. I think I was using that more as a take profit area to be out of the trade before that position. You are trading with a slight inverse risk to reward. I wasn't looking at this pair particularly on an intraday trade. I was looking at more as a daily, as the fact that we had that nice bullish candle close higher. So having a look at where you are at the moment, yes, an intraday close higher than the weekly R3, you could look to target just short of that next monthly pivot. However, the target is not that great. It is quite small. And when I say when we're looking for intraday trades, if we're looking for 20 to 25 pips, we don't want our major target to be 25 pips away, because we're wanting to go short of that target. So it is a potential trade position that is setting up here. So well done, Neil, on finding that. However, just realize that if you do take the trade, you're going for a very small amount of pips. The ideal scenario is finding an entry to target that is 50, 50, 60, 70 plus pips away, and then looking for intraday chunks of that, because you've got a higher probability of achieving them. But it's a good find. It is a trade setup, especially on the daily. Intraday, we'll still be waiting for a close above that weekly R3, checking that strategy is setting up. But you're going to be going for like 18 to 20 pips at maximum. And that all depends on how big that breakout candle is going to be. It could close well into your profit area, and therefore that trade will become irrelevant. Right, so Chris, can you just hand the screen back to me, please? That'll be great. Okay, I hope you can see my screen. I've just scribbled down a few things here. They could have changed over the course of the session. So the next one, I'm just going to quickly run through. I'm not going to go into a huge amount of detail. Chris is excellent at that. Me, not so excellent. But it's the Swiss franc yen. And basically, I'm having a look at this on the daily. I'm certainly not looking to intraday trade it today, but it's definitely one for us to keep on our list into the week ahead. Having a look at the monthly, we've got a red arrow, a blue candle, RMO is just blue, and SMA is now turning red and bright. So the strategy is not set up. We've got 2 red and we've got 2 blue. So what the interesting thing to see is that for a change, the momentum has now gone bright red. So having a look at the current monthly candle, we can see it's attempted to trade very much lower during the course of the month. It's pulled right the way back up, but it is still trading very much lower than that previous month's close. We well below that monthly central pivot. And having a look at those moving averages, I can't see my 200-day moving average. There it is. Still quite a distance away from price, so I'm not going to take too much notice of that at this stage. If I drop down onto the weekly, here we can see our matrix. It is predominantly red, especially from the weekly downwards. On the weekly, we've got a red arrow, red candle, RMO's red, SMA red and dark. Now, why do you think it is dark? Okay, it's dark because we've had 3 weeks of indecisive candles. This week's candle is now showing that continuation to the downside. But what we've got here at the moment is the monthly S2, and we can see it is a swing. It's a support level, and therefore price would need to be trading lower than that. So for starters, what we're going to be doing is looking for that weekly close lower and then look for continuations thereafter next week. By dropping down onto the daily, we've got a red arrow, red candle, RMO's red, SMA still remains blue and dark, and so the strategy is not set up. But as I said, I'm not looking to trade this right now. I'm looking into next week and the month ahead, the month of February, for continuations to the downside. Price is trading below the 3 moving averages. Those moving averages are trading in numerical order. They're really nicely spread out as well. We're below the weekly and the monthly central pivots. So what I'm going to be doing is looking for continuations next week below the monthly S2 level. Obviously, things are going to change over the course of the next 2 days in terms of our pivot points. But we would have broken out of this consolidation that we've been in for a long period of time. And then we could look for continuations to the downside. Price at below the 3 moving averages, again nicely spread out, so we should be looking for selling positions. So put a note down on that pair for next week to have a look at this to see if we can get further selling. The other pairs I wanted to have a look at, obviously Euro is going to carry more risk until we've had our news out, but the Euro CAD, I'm looking at this on a daily as well. I drop down onto the monthly, start from there as always. On the monthly here, we have got a red arrow, blue candle, RMO blue, SMA red and dark. So the strategy is not set up, it's not giving us much indication, but what we're seeing is a very negative month of selling on the euro against the Canadian dollar. So it's trading very much lower than that previous month breakout that we've seen, but we're trading currently into that 20-day moving average. It could act as a support. It hasn't really done so much over this previous area that we were in back in, what was that, July, August last year. So going back down onto the weekly, here we've got a blue arrow, blue candle, RMO blue, SMA blue dark, showing that slowdown in momentum of bullish behavior that we've seen. We've now got price trading below the 20 and the 50, below the monthly central pivot, below the weekly S1, and our next major target coming forward would be the 200-day moving average on the weekly, and we can see prices use that as a support. But I'm looking at this in terms of daily and weekly, possibly looking from Sunday, Monday onwards. Here we can see on the daily a huge consolidation level on this pair. Right, I don't know if I can shapes. All right, so looking here, we've had a lot of consolidation over a long period of time. Okay, so right from the beginning of the year, price has been consolidating in this area. However, if we can get a nice bearish candle breakout here, we've got a red arrow, red candle, RMO's red. We're needing to see SMA breaking with momentum, and then look at that lovely target to the downside. So another one to keep on the list for next week is certainly going to be the Euro Canadian dollar. I wouldn't be looking to trade this intraday. As I said, I can't reiterate it enough. We are coming to the end of the week, the end of the month, and non-farm payroll. I'd rather give it to the market, wait for those nice closes, and then look for continuations into February. The other one looking at was again the euro cross pair, and that being the euro Australian dollar. Just going to clear up my chart here for you. Right. Sorry. So on the monthly, again, we're getting that same formation happening. We saw a bullish last month's candle and a bearish month this month. We see it trade very much higher during the course of this month, and trading very much lower at the moment, back below that monthly central pivot. We've still got a blue arrow, blue candle, RMO blue, and SMA is in existence. Okay, so there's absolutely no momentum coming through on this time frame. It is a lagging indicator. If we just look at price action in itself, we can see straight away it is extremely bearish, looking at the highs at which it is traded to during the course of the month and now trading lower. And we've got the 20 and the 200-day moving average, which is below price. So when we drop down onto the weekly time frame now, we've got a red arrow, blue candle, RMO blue, SMA blue but dark, again showing the slowdown in momentum because we've seen a couple of weeks of bearish candles coming through. We've been looking for price to be trading lower than the 50-day moving average. We're starting to see that now. Okay, we've got price below the 50 and the 20 and below the monthly central pivot. So what we've got now when we drop down onto the daily is a red arrow, red candle, RMO red, SMA red and bright. So the strategy is set up, but it's only set up on the current daily candle. We showed you last night what can happen if you don't wait for the closes. Candle colors can change, SMA can change, as can RMO. So daily traders, it's not set up. You would still be looking for that daily confirmation close. However, from the daily to the 5 minutes, we do have a very bearish matrix. Okay, so when we drop down intraday, we can be looking for continuations to the downside. We've got a red arrow, red candle, RMO's red, SMA red and dark. That's because of that consolidation zone. We had that bearish candle close last night below the weekly S1, but remember what I said, we would be expecting a pullback on such a big drop like that. We saw the pullback, and now what we're going to be doing is looking for continuations again. So a nice 4-hourly confirmation close back below the weekly S1 with our SMA bright again. We could be looking for intraday trades down to the weekly S2, and that is around about 72 pips. So still a nice intraday trade between these two levels. Am I seeing that my sound is gone again? Can everybody hear me? Okay, it's fine. Right, so dropping down onto the hourly, again, we'll be looking at the box breakout here. Our entry will still remain the same. We've got a red arrow, red candle, RMO's red, SMA blue and dark. The strategy is not quite set up yet. We're needing SMA to be below, but if we can get a nice box breakout here with negative momentum, again, we've got a clear intraday entry to target on this pair, and therefore this is on my watch list today. We're obviously got to be cautious of the news out today. You might want to wait for that to be behind you and then look for maybe 20, 30 or 40 pips intraday trades on this pair. So those are the ones that I wanted to run through with you quickly. Some of them obviously are potential trades for today. Some of them we are going to be looking at into the weeks ahead within February and the VIP forum. And should we continue to do these sessions, we will obviously be looking at them at that stage. So guys, we again have run over slightly. I hope you've enjoyed your session. We've got quite a few things to keep an eye on today. And thereafter, you guys have got a really nice long weekend with non-farm payroll. But it gives you the opportunity on the weekend, once the markets are closed, non-farm payrolls behind you, to sit down and do your analysis and prepare for the week and the month of February. I can't believe we're already moving into the month of February next week. But the markets, as I said, are certainly starting to look a bit better. Obviously, we've still got all the trouble with regards to Brexit that we're going to have to keep an eye on, but we will do that together as a group. So, guys, it's been absolutely awesome having you with us for this past month. I hope you continue to join us within the VIP forum, especially our VIP members. If the opportunity comes up again, you'll certainly know about it. I have already mentioned a big thank you to those who have written reviews on our free index page with regards to this training. Any sessions in the month of February you will receive free of charge, and you'll be notified of these well in advance. On a final note, I know that you guys found it maybe a little bit of a joke when we started off in terms of me issuing people points for attendance, points for questions, but in all honesty, it wasn't a joke. I have been keeping an eye on every single one of you. Your commitment to your sessions, your commitment to asking questions, your commitment to providing currency pairs, and your commitment in the VIP forum for continued learning and and development. And there's one person that has certainly stood out amongst everybody else. And my favorite saying is, you can take a horse to water, but you can't make them drink. And that is, a challenge that Chris and I face every single day within the industry that we're in, and teaching students how to trade. We can take you and we can teach you everything that is required, but it's your commitment and your dedication that's going to, in the end, be the result of you making it as a trader or not. And as I said, this person over this past month has really shown dedication to the training and to trading and to the support, and shown a lot of commitment, and that is Alison. And as a thank you to Alison, and as a reward to her, Alison, you will receive your next 3 months of VIP membership, as well as access to our new program, absolutely free of charge, as a congratulations and a thank you for your dedication. Guys, that is it. This is the end of Getting Back to Forex Trading 2019. We will be logging off now. We will be inside the VIP forum. We wish you guys an awesome long weekend if we don't see you around, and we will be back in the forum full time again from Monday. Have a great weekend if I don't see you. Well done, guys. Keep it up. Keep going at it, because the results are there for you to take. Take care and goodbye.